We have an economy that's going to slow down, and I think that's to be honest, that's one of the biggest concerns I have, and this is kind of shocking. This will be shocking to people.
Hey guys, welcome back to the channel. Today we have Gareth Soloway giving us his market analysis and price prediction for Bitcoin, as well as his take on the economy and where crypto is headed in the next few months. With many stocks sitting in a very tight spot, we can now see a scenario of many banks defaulting, which will look very similar to the Lehman Brothers collapse in 2008, but Gareth believes the Fed will pivot and stop further interest rate hikes, preventing an economic disaster. Let's listen to this interview with Gareth Soloway as he gives his investment advice and price prediction for Bitcoin, as well as where the crypto and stock market is headed in the next few weeks. Don't forget to like and subscribe if you enjoy what we do here on this channel. Let's get right into the video.
There's no doubt that there's panic in the markets, but per the VIX, we haven't hit the levels where I would say there's a market bottom yet, right? So I've been consistently saying, yes, you're going to get bounces when you get these big sell-offs, 2%, 3%, you get that kind of mid-level panic that triggers a bounce, but by no means is the market at a near bottom yet. You know, you still have a Fed that's aggressively hiking. As of now, we'll see what the CPI data is coming up, but for the most part, the Fed is hiking. We have an economy that's going to slow down, and I think that's to be honest, that's one of the biggest concerns I have, and this is kind of shocking. This will be shocking to people, but you have $1 trillion in savings that consumers accumulated over COVID, right? And so the Fed is saying, oh, look at these jobs numbers. They're still very, very strong. People are still spending. The consumer's still doing well. So we have to continue to hike rates. Problem is, consumers are going to run out of that money that they saved probably by mid-next year. And my biggest fear, and this is this could be what triggers a massive kind of recession, if not worse, is that when they run out of money and the Fed has just hiked and hiked into it, there's going to be a cliff dive in the economy. A recession can be mild, right? I mean, you could have, okay, it's a little minor recession. I mean, even the Fed has said, hey, we don't care if we push the economy into a recession. But a cliff dive, that's where you have unemployment going to 5, 7, 8, 9, 10%. And that's where you get in trouble, where the Fed then has to start lowering rates instead of just going to neutral where they're not hiking anymore. And potentially down the line, I do worry that it's going to get so bad that even with 4% inflation, you still could see a point where in like a year, 2 years from now, the Fed has to actually start QE again. I think they won't want to do, if they've done 75 3 times in a row, it's unlikely they would now jump, because that would really freak the market out to go to 100. So I think you're going to look at 70, or if the CPI data and the economic data shows that we are seeing a lowering inflation number, then maybe you get a 50 in there. I do think that a lot of other central banks, like Bank of England, we know they've stepped in here. There's a lot of concern out there from other central banks saying, hey, Fed, you're doing this too quickly. Our economies, our currencies can't handle. You're going to break us.
It's hard to fathom the Fed raising interest rates by 225 basis points in such a short period of time. Soloway knows the Fed realizes something must be done to save the economy, because rate hikes could have a domino effect that triggers a severe financial crisis. With inflation being at a record high now, we can see that the market has no good endgame. In the long term, he sees many economies getting destroyed by what's happening.
Are you afraid of another Lehman-style crisis? Are you afraid of contagion like we saw in 2008?
Yeah, I am, absolutely, because number one, we've heard about Credit Suisse, right? I mean, there was rumors just a couple weeks ago or a week ago about Credit Suisse having issues. And the thing is that, the Fed has enabled the financial sector to do a lot of the same things they did in the last financial crisis, right? I mean, it's almost like no one's learning from the rules. I mean, even Dodd-Frank kind of got pushed under the rug a little bit. And that just, so it's like the short term, everyone's just focused on how can we be the most robust economy in the short term. Well, guess what? Eventually that breaks, and that is an issue for sure. So the Fed isn't gonna, so there's two things. Everyone thinks a pivot is where they start dropping rates. Yeah. My pivot is where they go from 75 to 50. So it's like the downsloping mountain versus the upsloping climb.
I'm talking about just straight up stopping raising rates.
So just going to neutral. I do think by 2023, early first quarter, they're done. And I think you're going to see the jobs numbers. At some point, these jobs numbers are going to crack, and we're going to see a big drop and a fast drop. And again, this is going to coincide with people running out of this COVID savings and all of a sudden really pulling back. And think about 401ks. Think about your house. Like, as we see the housing prices fall, and we're starting to see that now. The wealth effect disappears, and people feel like it's one thing to say, I'm gonna go buy a new car because my house just went up 100K in the last 3 months, and you know what, the economy's rocking, but now all of a sudden your house drops 100, 200,000, and you have other factors that are pulling you back. Now you just put on the brakes and the cliff dive occurs. My guess is it will signal a major bounce. But again, like I said before, stock market to me, 5-10 years before we make a new all-time high. But you know what, it's gonna put a bottom in, and there's gonna be a new bull market. Bitcoin and gold will outperform, absolutely. As soon as you get a pivot, gold is gonna rip because the dollar will fall. Yeah. And Bitcoin still has some downside because it's still a risk asset, but down the line in like a year, I do expect a major bottom in Bitcoin.
Hold up, so are you saying the NASDAQ is gonna stay flat for 10 years as well?
So not flat, let's be clear on this, not making new all-time highs.
No new all-time
So like
highs.
think about the .com, right? It took 15 years to make new all-time highs on the NASDAQ. Yeah. If you look at the Brazilian market, if you look at the Hang Seng, both those markets made their highs in 2003, and they have never taken out those highs, but you've still had mini bull markets in there with huge moves to the upside.
But okay, so wouldn't that mean that Bitcoin isn't gonna make new all-time highs because it's been correlated with the stock market?
Yeah, you would think that it wouldn't make new all-time highs, but I actually think that there will be a pivot in Bitcoin as it matures, as regulation helps people feel more confident, institutions feel more confident. You're going to start to see it being treated much more like gold, which will then
it's going to start diverging from the stocks.
It will, not yet. I want to be clear to everyone out there. It's still going to take some time, but there will be probably in about 12 months a divergence that begins. First support is 12 to 13,000. I think in the near term, we're going to see a little bit of a bounce, then a wave down to 12 to 13, and then I do worry that you're going sub 10 to 8, maybe even worst case scenario, 3,500. 3,500, very small percentage, but that would be the equivalent of Amazon.com's collapse in the .com era if it were to equal that.
Okay, gold?
Gold, I'm still a huge bull on gold. Remember, dollar's up 20% this year. Gold at the lowest was down 7%. If the correlation with gold and the dollar should have meant gold was down 20% when the dollar was up 20%. So the fact that it's only down 7 or now only down 5 or so, it tells me that big money's buying gold. That means it's going up. I'm a buyer of gold.
Investors anticipate that the Fed will slow down at its upcoming meeting in November by raising interest rates by 50 basis points. This will serve as a subtle cue from the Fed to the markets that the economy will be expanding once again. Investor sentiment was at an all-time low before last Friday's recovery. Even large hedge funds are placing bigger bets, but many of them have high levels of leverage, which dramatically elevated their risk. We are also witnessing the extremely rare occurrence of hedge funds actively unwinding up to 30% of their clients. For Bitcoin, it might be difficult to determine if it makes sense to sell a position and purchase lower if the price declines. Soloway advises against selling since there is a good chance that a bull run will commence soon and investors would lose out on profits. What do you guys think about Gareth Soloway's prediction for Bitcoin and the direction the stock and crypto markets are headed in the next few weeks? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.